What's going on, traders? In this video, I'm going to break down supply and demand so simply. You're going to be spotting these zones on your charts today. And you're going to want to stick around to the end of this video because I'm going to break down a strategy step by step. All right, before we hop on the charts, first we need to define what is supply and demand. So let's start with supply. A supply zone is an area where selling pressure tends to outweigh buying pressure. A price range where a significant number of sellers are likely to enter the market. Supply zones are where you would typically see aggressive selling. Think of it like the outlet mall. When you go to the outlet mall, they have a surplus of inventory and they are aggressively selling. So you would look for sells at a supply zone, right? And supply zones are typically near resistance areas. So you think of supply near the top. So supply could also equal resistance. Make sense? Next, let's talk about demand zones. A demand zone is an area where buying pressure tends to outweigh selling pressure. A price range where a significant number of buyers are likely to enter the market. So demand zones, you're going to look for near the bottom. And you guessed it, it's the opposite of the supply. And you're going to look for demand near support, right? And demand zones are also known as buy zones because what happens? You're going to think about when that new PS5 just came out and there's only a limited supply. What happens? There's a crazy high demand for it. Kids are lined up outside the game stores because they want to what? Aggressively buy. So you are buying from the demand zone. You're looking for buys. Make sense? Okay, now that we understand what supply and demand zones are, let's talk about how we identify them on the charts and how we will draw our zones. So the first thing that you want to do when you come to the chart is you want to look for an area where there is a big move happening, an aggressive move. So if you see here, we can come on the chart and we'll see in this area, after we printed this big red candle right here, we just had this big sell-off, right? There was a big bearish drop after all of this consolidation, right? Price wasn't really doing too much. You have all of these candles. They're about the same size, doji, very small candles next to each other. So an area of consolidation nonetheless. And then right after we printed this bearish candle, we had a sell-off. So we can identify that there was aggressive selling coming from this area. So what do we want to do? We want to draw our supply zone. So our supply zone is going to be drawn from the top wick of the bearish candle to the bottom wick of the bearish candle where the aggressive selling came from. So once you have your supply zone drawn up, now what you want to do is just wait for price to come back into your zone, and then you'd be looking to take your sells. And as you can see, this one played out perfectly. Once it came back to our zone, it just completely dumped off. Okay, let's take a look at an example of a demand zone now. So as you can see, we have this area right here where we were on this downtrend and then all of a sudden we had this bullish push to the upside. So we would consider this area a demand zone. So we would look here where the aggressive buying really started to kick in. Now, unlike the previous example of the supply zone where we had a bullish candle, bearish candle, and that bearish candle is where we drew our supply zone, we don't really see the aggressive buying coming from this first candle, right? So I wouldn't consider this first candle as my demand zone. So I'm going to take my demand zone and I draw it from the wick of this candle, this green candle here, the top wick, the bottom of this red candle, because that kind of lets me know that that's where the selling pressure kind of died off. So if price breaks back below that zone, then obviously the demand zone would be invalid. All right, gang, I know exactly what you're thinking. How do I actually take advantage of these opportunities, right? How do I actually get into a trade, right? How do I know when price comes back to my zone that I should be entering to a trade? So let's jump back on the chart and see where we could have entered and where we could have exited to capitalize off of our supply and demand zones. Okay, so now that we know that once we draw our zones, we're just waiting for price to come back to our zones before we get into a trade, let's talk about entries. So there are 3 types of entries that you can take. The first one is going to be an aggressive entry. So an aggressive entry means that as soon as price comes back to this zone, the second that it touches your zone, you get into a trade. So what does that look like? That means that as soon as price comes here to my demand zone, the second that it touches, I'm going to get into this trade, right? I want to put my stop loss right underneath the zone. And then I'd be looking to catch 1 or 2, right? I'm looking for a 1 to 2. So that's what this trade would have looked like. We would have got in the second that the candle touched our zone. Boom, we hit buy, push up, 1 to 2, we exit the trade. And you actually can see that the trade kept on running for much more than a 1 to 2, right? That's an aggressive entry. The second entry is going to be what I call the break of the candle. A break of the candle entry means that once we have price come back and touch our zone, once the next candle breaks the high of that candle that touched our zone, that's where we want to take our entry. So that one would look like this. We have this red candle here that came in, touched our zone. And then just as this green candle is breaking above that red candle, we would take entry. And again, I'm going to do the same thing. I'm going to put my stops just beneath the zone. And I'm looking for a 1 to 2. Same thing. Stop loss is a little bit bigger on the break of the candle entry because it is a little bit more conservative. But you see, price still worked out. If we would have held, we still would have gotten our 1 to 2 winning trade. Let's look at the third entry. Is the most conservative of them all, and that's a candle closure. With a candle closure, what we will be looking to do is we will be waiting for our first candle to come in, touch our zone, and then we'll be waiting for the following candle to break and close above the candle that touched our zone. So what that would look like is we would wait until this green candle fully closes, and we'd get in right at the closure of that candle, take our buy entry. Stops would be right beneath our zone. Same thing. I'm looking for a 1 to 2. In this case, again, the buys played out. Winning trade. All right, now let's look at how we could have taken advantage of some of the sell opportunities from the supply zone. So just like our demand zone, right? For an aggressive entry, we would have been waiting for price to just come back and touch our zone before we look for sells. So what would that have looked like? So we would take a short position, and the second this first candle even touched our zone, we're hitting sell, right? We're going to hit sell, and then what are we going to do? We are going to put our stops just above the supply zone, and we're looking for what? Say it in the comments. Put it down in the comments if you know exactly what we're looking for, right? We are looking for a 1 to 2. 1 to 2 RR, right? Beautiful. And you see this ran down, kept on going, right? So now if we wanted to look for a little bit more conservative entry, but not fully conservative, what are we going to look for? The break of the candle. So now a break of the candle entry is going to look something like this. We have this last green candle that touched our zone. So we're going to look to get in at the break of that green candle. So we would hit sell right here. Same thing. Stops above the zone. And we are looking for a 1 to 2. Beautiful. And then our third entry, which is the most conservative of them all, is going to be that candle closure. So a candle closure would have simply been right here. We have this red candle here that closed beyond this green candle. So we are going to hit sell right here. Same thing again. Stops just above the zone. And we're looking for a 1 to 2. Winning trade. Just like that. Okay, gang, so let's do a quick recap. Now we understand that supply zones are where aggressive selling appears, and demand zones are where aggressive buying appears. We know that there are 3 types of entries that we can utilize to take advantage of price coming back to our zones: aggressive, break of the candle, and candle closures. I hope that you guys learned something from this video. Go ahead and hop on the charts and start making money today. Let me know down in the comments if you did learn something. And for sure, come back to this video and let me know if this strategy helped you guys make some money. Don't forget to hit that like button and subscribe for some more. And I'll catch you guys in the next one. See you later.